Hey folks, Dan Frio here, the rate update. Today is July 15th, 2021. Federal Chairman Powell, he sat in front of Congress today. And what did he do? Don't go away. I'm going to go over what exactly he did and what the market, how the market correspond with that data. So don't go away. We'll be right back. So, am I excited? You bet I'm excited. And why? Federal Chairman Powell knocked it out of the ballpark. And why? So basically, just think of it. You're sitting there and you have all these lights on you, the media, all these senators in front of you, and they're asking you pointed questions because they're trying to push their agenda. And you do a fantastic job. And how do we know that? It's how the markets react. Okay, so there's going to be a bunch of naysayers, Dan. Oh, Dan, the Federal Reserve, this, that. Guys, what I do for a living is basically, mortgages. And I'm here to help and educate you guys in that area. So I post all this because if I could save you, an eighth of a point or an eighth of a percent on your interest rate over a long term, it's going to save you a lot of money. So I'm just educating you guys on what to look for and what to monitor. And is this a good time or not to do what you're looking to do? Buy a house, refinance, or do what you want to do. So let's dig into those details. Well, the headlines read right now, Federal Chairman Powell grilled by grouchy senators over inflation and climate change. These are the same people that are spending bazillions and trillions of dollars on the economy and COVID relief when we're almost at the end of COVID and a bunch of other stuff that isn't going to go into effect for years to come anyways. And it's probably going to get shot down when another administration comes in. But it isn't a political channel, so don't post political points of view down below. I'd appreciate that. But what we want to focus in on is how did the markets react? And in this case, what we follow here is the MBS market. But I want to show you first the economic calendar that came out today. And why? It's because all these things matter when it comes to mortgage rates and what's going on with mortgage-backed securities. So we go to the import price index year over year, right in line. Previous 11.3, actual 11.2. Now we get to some of the inflationary numbers. Import pricing index, the last month was 1.4. The consensus was 1. We came in right on target. The initial jobless claims, we were expecting 360,000, came in at 360,000, right in line with expectations. Continued jobless claims, actually lower than expected and lower than last month. So that's all good news for the economy. So normally what happens is when you have a good economy based on these numbers in a normal scenario, you're going to see the stock market go up and mortgage rates go up. Okay, what we follow here is the mortgage-backed security price because it gives us an idea what the yields or the mortgage rates are going to do. So that being said, we go to that next chart, and what did mortgage-backed securities do? Up 13. Awesome. Because you would expect if everything else is coming in with good news, that this number should go down because what do we know about mortgage-backed securities? This price here, when the price goes up, mortgage rates go down. Okay, that's how it works. So when this number is green, you have an up in price, you have a down in yield, inverse relationship. So if that number was down in the price, that means the rates would be higher. Okay, so that's what's happening basically today. And we see a nice little reprieve. Look at this. We're hitting uncharted territories. What did I say back a few weeks ago? I'm expecting us to hit the 103.8 handle. And that is right here. And that is also a Fibonacci level. Okay, so we went from here over to here. I thought we were going to stagnate. And then I readjusted my figures to a number right here. Okay, so let me make sense of this. This is a chart of what happened with the mortgage-backed security prices over the last quarter. So we had a nice run up until the Federal Reserve meeting in May, and then we had a debacle because of inflation fears and the mainstream media's fear-mongering. And then we had a reprieve, and then we stabilized until the next Federal Reserve meeting, and everything just collapsed. And then we had a recovery. Well, normally we recover a fraction of the losses because we all know there is a light at the end of the tunnel. And when the world gets back to normal, whatever normal may be, rates should be higher than this, okay? So what I was excited about is I expected us to stay in this range right here, but we actually kept running and running and running. Again, remember, as this number goes up, rates come down. We were a little over exuberant through this area, okay? And we have a little bit of a pullback. And then all of a sudden we had a reprieve back in the market. Back in this area here, I said we should be trading at the 103 mark. Please feel free to go back to my videos from week, 2 weeks, 3 weeks ago. I don't throw out just generalizations saying, hey, rates are going to go up next year, baby. I try to help you pinpoint the numbers and where I expect us to be. So we are not locking in any clients right now. We are not. Why? The best reasoning behind that is look at the chart, guys. Look at this chart. Okay. We did hit this. I'm hoping we hit this Fibonacci level tomorrow and we stay there, because that'll tell me that this line is a true resistance level, and we hopefully will hold there for a little bit. Okay. So that's what I'm doing there. The next thing is, let's see what happened intraday, because this is telling us how Federal Chairman Powell did. So he started out his meeting. Let's go back to that, what time he went in, and he went into his meeting at 8:30 a.m. and he continued throughout a good portion of the day. So you can see that we had a nice rally here, and then some bad news started coming in. Probably the markets opened and everybody started watching, and then what happened? We had a nice recovery. Okay, so this basically tells me the market digested what he had to say and it liked it. Okay, what I don't like is all these red candlesticks right here. That means to me, or that basically means there's more sellers of the bond, mortgage-backed securities, than the buyers. Okay, so that's not good sign there, and you could see this right here. Normally, it has a drop in the price. Okay, so that's what normally happens. What I want to do today, right now, is go over what my rates on a particular file are, and then we're going to start to generalize, because people are like, Dan, you don't post your rates. Well, it's hard, but I just had it. We had our last client. This is the last person that I reviewed for today. And here's what they were looking to do. And if you're watching this, I apologize, I didn't get the name from Nico, but this is a true client that we worked on. And this is what we do behind the scenes to ensure you guys are in the right program. So the person was looking for a $800 and some thousand loan, but they were looking to buy a $1.5 million investment property. Okay. So the comment was they wanted to stay under the jumbo limits because of pricing or rates and fees and timeframes and so forth. What I gotta let you know is I'm a lender. Okay. We're not a broker. We control everything in-house. So we should be able to get your loan done within 3 weeks, normal cases, if you work with us. What we can't have is, if you stall and we need a pay stub and it takes you 2 weeks to get me the pay stubs, there's going to be a lapse in time. But if you use our application, I'm going to show you at the end how to do that, and you upload everything in the file, it should go fast, smooth, and should have no problems, really no squeaks in the wheels. But let's go through this pricing just so I can let you know where the rate was. And what I mean by pricing is I'll say the interest rate. So this is basically the criteria of this client. And it was an investment property. So I'm going to click investment property. And basically what we were trying to do initially was just do a loan. And in this market, it's a particular market in California, they have a what's called a high loan limit. Okay. High loan limits, believe it or not, for us is riskier and has a little bit higher rate than our jumbo products. So what I did is I initially priced this out as a standard loan, and it's a tough loan because one reason it's an investment property, and it's basically, somewhat you have to consider a jumbo loan because it's $800,000. But I won't go through jumbo, high priced, and all that other stuff now. But let me just show you how rates came in. So this rate's going to be fairly high because it is what we call a high limit loan or a high balance loan. You can see right here, the rate was 4.375. That's a high rate. I agree it's a high rate. So the first thing I do is saying, well, our jumbo rates, and I'm going to prove that here to you in a minute, are some of the best in the entire country. How do I know? Well, let's just watch this. I changed that to meet the jumbo criteria. So I had increased the loan amount $5,000, which really didn't do any difference because this person is putting down almost half or 50% of the down payment. I then go down through, and on our side, I have to choose these different variations to tell my program, my pricing scenario, that it is a jumbo loan. Okay, so now I go in and I click it, and let's see where my rates are. Okay, so we're going to go to the top of the heat. We underwrite for all these companies. It comes in, and I can go in this range. So a minus is basically what you would have to, or minus, I'm sorry. When you look at the rate here, you're going to see a rate. Then we're going to slide all the way over here into the minuses or pluses. and then the dollar sign, which is the minus or plus. Okay, what this, how you read this is, for example, this person, if we offered them 3% on the rate, again, this is a 30-year fixed rate, they would get actually back $1,031 in credits, lender credits, to cover any other costs they have. If they want 2.875, they'd have to pay a quarter point or $2,062 to get that rate. I have a special going on right now that we will give you up to 25 basis points back in credits. So in this case, this person is basically at 2.875 and it is costing him no points. So where else are you going to get a jumbo on an investment property at 2.875 on a 30-year fixed rate? Okay, so that's my rates. So I'm just showing to you that my rates are among the best in the country. Let's go over to the normal prices or the normal rates throughout the country. So we get this report from Black Knight every day, and it tells me what's going on with rates. Okay, so we write back and they compile all this data. These are not my rates, guys. This is a national average. 30-year conforming, jumbo, FHA, and VA. The 30-year conforming is 312, jumbo's 316, FHA's 32, VA's 275. Look at this. I'm giving that, I quoted out 2.875 on a 30-year jumbo on an investment property at 2.875. I blow away this number because this number represents what rate you could get for a primary home, not an investment property. Okay. So the next thing you see is 1 day delta, 7-day delta, 4-week delta. Delta means change. 1 day obviously means 1 day. So where we were yesterday. Rates are 2 basis points lower today than they were yesterday. 2 basis points equates out to 0.02. Okay, so that means yesterday we were 3.14. Today, if they drop 0.02, we're down to 3.12. So hopefully that makes sense. So that just shows you what rates are today, how my rates are throughout the country, especially on our jumbos. If you're looking for a jumbo loan, we are the place to go. How do you find out more about me and my company or my team? Go to therateupdate.com. Things get added to this every day. What we just added today was the schedule a meeting. So if you're looking to schedule a meeting, this is what most people are doing. They're either calling us at the 844-775-LOAN. They're scheduling a meeting. They click here. It'll open up the calendar tab. You can pick a 15, 30, or 60-minute consultation. You click that. It'll find all the days and times that I have available. You click it. You put in the time that meets your needs, and you'll get an email and a text. And it'll say, do you want to do this by phone or Zoom? And just let us know how you want to do it. And then on that day, at that time, expect a phone call from me or at least my assistant to get some of your data so we can break down and kind of come up with a formula to fit your needs. So that is it for today, guys. I want to thank you for watching. Kudos to Federal Chairman Powell for what you did. You're helping out the housing market. A lot of people say, God, it's way overheated. Yeah. It's going to stabilize because more and more people are going to come out of forbearance and there's going to be more and more homes on the market. You just watch what I say. And only proof's in the pudding, and we'll see probably in about 3 to 6 months what's going on there. So take care, guys. I appreciate you watching. Give me a thumbs up. Subscribe down below. Hit the bell every time we post a video. You get an alert. See you tomorrow. Bye-bye.